Hi there, Serial Trader here. Let's check in with the major US indices and starting off with SPX here. Go over the Elliott wave chart. So it looks like we do have a nice pivot low here since the last video labeled as wave 5. And that low came in at 2603.54, so right around that 2600 magical round number area, which was quite close to the E-wave low that we put in on this triangle over here, which came in at 2594.62. So obviously around that 2600 area, at least an initial level of support that we're reacting off of. Now at this point, pretty convincing that the oversold bounce is in play. We had that, we'll get to the candlestick chart later, but we had a bullish engulfing, or very, very close to a bullish engulfing candlestick. Let's see, that was on Tuesday. And then yesterday on Wednesday we gapped up, closed above the T line. And then today, or as of today's close, Thursday, we had another positive session and closing near the highs of the day. And then, yeah, we just have, so this entire decline here from the top. We have the Fibonacci retracements to be looking at, and the first one be looking for is this 50% retracement, and then certainly would be pretty common to go with the 618, which is also this previous fourth wave of one smaller degree and a nice resistance level to look for a reaction off of. But at this point, we're probably pretty mature in this initial leg up of the bounce, and by that I mean we're probably close to being done if we're doing a three-wave upward correction. Probably almost got our A wave in place. Then we'll need a B wave retracement, maybe come down to fill this gap. And here, let me just get rid of this line here. Could come down and fill this gap in the B wave, because after such a strong downward move, it'd be very shocking not to come down and fill a gap like that. Gaps tend to get filled anyways under normal conditions, especially on major indices like this. Very, very often you'll see the gap get filled. So that'd be an initial level to look for to the downside if you want to try and catch the B wave, you know, do a little short play on that. Me personally, I'd like to see more development before doing anything too crazy other than just playing the intraday with the futures, which is working nicely with all the volatility. Okay, and then we'd want to have, you know, a C wave up. Maybe come up to this zone here around the 618, fail, start rolling over, and then really be looking for another down leg, take out these lows, right? But on the hourly chart, let's see here. Maybe we'll do the 30-minute, a little more detail. So from the low, looks like we have a little 5 waves up potentially in place. So maybe something like this, 1 up, 2 down, maybe a little 3, 4, and 5 in place. And yeah, that should be fine. For a minor wave A, and now perhaps we need to come down fairly soon, possibly right away, in some sort of corrective 3-wave decline. Again, maybe close the gap while we do it, put in our B wave, and then be looking higher in you know, another 5-wave sequence for wave C. Just kind of a rough roadmap to be looking out for. But yeah, it looks like we do have a little 5-wave in place, and definitely favoring coming down to test that gap sooner than later here. So something to be looking for. We did have that nice pivot. I like the timing of that because basically right around near the end of the month, right? Let's see, what was this actual day? So October 29th was the pivot low, which was only 2 days before the end of the month. So that's quite nice to see. Like that as a timing aspect. Alright, so that's probably good for the wave chart here for now. So we'll go to the candlestick chart at this point. Okay, so SPX candlestick chart. Again, we had that bullish engulfing. Now a nice gap up, close above the T line. Another strong trading day today, closed near the highs of the day. Obviously over the T-line again, and 3 T-line is now crossing over the T-line. But there's some interesting levels here. So other than the stuff I was showing on the wave chart, we have this falling 20-day simple moving average that might provide some resistance. We also have the 200-day moving average, which was kind of a congestion zone that we failed from. So it may have acted as support formerly. Perhaps now it will act as resistance. Just because we have our some fib levels up here and the previous resistance level here doesn't mean we actually have to go there and hit it. If we just get up to that 200-day and this 20-day and kind of fail there and roll over, maybe that was it for the bounce. And I think that would probably be close to that 50% retracement anyways, which wouldn't be, out of character for a retracement upwards. Yeah, so doing the fib pull right around that 200-day moving average would put us at that 50% retracement. So we'll have to see how that level reacts. But I would say short term, probably looking for a move down to fill this gap pretty soon here. And I did notice pretty negative after hours reaction to Apple earnings. It declined quite a bit. So if that carries over into tomorrow, I mean, Apple is a very large cap stock, has a lot of weight in the indices. Certainly the Nasdaq. Well, actually, I think it might be in all 3 indices. I know it's in the Dow. Pretty sure it's in the S&P and the Nasdaq as well. So yeah, we'll have to look at that. Don't quote me on it being in all 3, but I know it's in at least a couple of them. So that could be the catalyst to come down and fill the gap at least. Alright, so that's good for SPX. Oh, actually, one thing. I just wanted to revisit the monthly chart there because we did close the month now. And, okay, let's have a look here. So on the monthly chart, we definitely ended up doing a bearish engulfing, although we engulfed 2 prior months. So at one point there, it looked like we were going to engulf 4 prior months, these 2 candles, as well as these 2. But we closed just high enough to avoid a 4-candle bearish engulfing. But still, a 2-candle monthly bearish engulfing, still certainly a significantly strong sell signal on this time frame. And you can see that we closed well below the monthly T-line and currently still below that monthly T-line. So perhaps, on the way up, the monthly T-line was certainly a good support zone, even for these, significant pullbacks along the way. Perhaps now, if we do start a new downtrend, the monthly T-line will actually become a resistance level as opposed to a support level. But something to watch for going forward. All right, that should be good for SPX. So now we'll look at the Dow Jones Industrial Average. And the Dow has bounced up similar fashion, gapped up there along with the S&P. Above the T-line, 3 T-line crossing above the T-line, although we're running into this 20-day simple moving average that's falling down here, so that may provide resistance. The 200-day moving average seems to have a little bit less pivotal significance as opposed to the one on the S&P. But still worth noting, we got above that here on the Dow. Interesting to see if we can, come down and actually find support on that 200-day, although I'm skeptical. With that gap there, I suspect that's going to get tested. And then, yeah, so retracement levels on the Dow. Let's just do a fib pull of this entire move down. We're not so far away now from this 50% retracement level. And then, of course, the 618 is up here just above our previous bounce we had there, that wave 4 bounce. So those are some levels to watch. And, okay, Nasdaq Composite. Let's have a look at this. Okay, Nasdaq Composite, gap up bounce. So they all look the same, basically. Nasdaq had that piercing, bullish piercing candlestick on Tuesday, and then confirmation gap up on Wednesday, close above the T-line, and then today, nice strong close, high of the day, or highs of the day. 3 T-line crossing above the T-line, but again, running into this falling 20-day simple moving average, see if that provides any resistance. Then, of course, we have the 200-day moving average up here that may provide resistance as well. And then the Nasdaq will just do the fib retracement of this entire decline. The 50% retracement comes right in around that 200-day moving average, so that'll be interesting. and then the 618 basically right on the previous fourth wave pullback we have up here, or should I say fourth wave bounce since we're in a downtrend. So those are some levels to be watching. Again, this may be a short-term peak we put in today on all the indices. If that Apple weakness translates into tomorrow's session, we'll have to see. Sometimes after hours gets completely reversed during the regular session, although pretty heavy volume Apple was trading on after hours, so, and it declined a lot, so we'll have to see. But yeah, that's what we should be looking for on the Nasdaq. And also, on all these averages, you know, the 50-day moving average hasn't crossed below the 200 yet, but if we get another leg down after bouncing here, we could have the so-called death cross when the 50 crosses below the 200. So that's another thing to be watching for, too, as we progress. And right now, the 50 certainly starting to curl down, and the 200 obviously won't start moving for a much longer period of time as it's a longer look-back period. All right, and I think before we go with the VIX, I'll just have a little peek at Apple after hours here. So let's have a look. So, okay, I'll go the daily first just to see where Apple closed. So Apple had a nice strong close, strong day. You know, it gapped up with the rest of the market there. Closed above the T-line yesterday, and 3 T-lines crossed above the T-line. Closed near the highs of the day. I had this little channel drawn here. Started breaking out the channel. It's actually looking pretty bullish here. But, okay, so we closed at 222 and change. So look at where we are after hours. And let's see, after hours we basically closed at 207. Yeah, 207 and change. So we went from 222 to 207. That's a significant decline on Apple, such a large market cap stock. So if this sticks tomorrow, I'm inclined to think that we're going to have a pretty weak session, possibly some major downside on the overall market. But we'll have to see how this actually plays out, you know, pre-market tomorrow, and then obviously during the regular market session. But just worth noting, Apple appears to have had a very negative reaction to its earnings. Okay, now, that being said, let's go to the VIX. And VIX. So VIX definitely failed to put in a higher high from the wave 3 low on the indices. So we got a lower high in VIX, and that was at 27.86. Now we've obviously had a large pullback in VIX as the bounces started playing out on the market. But we'll see if VIX actually sets a higher low, and that would be anything above 1706 here. So if we set a higher low on VIX, and obviously looking for a lower high in the indices, this could set up for another long VIX play, pick up some long VIX calls for that next explosive move down, if that's what we're going to get. So keep an eye on this. If VIX sets a clearly higher low, starts moving back up, and the indices clearly set a lower high and start rolling back over, that'll be pretty good confirmation to look lower overall on the market. Okay, that's probably good for now. See what tomorrow's session brings, and do an update over the weekend sometime anyways. Alright, Serial Trader signing off.